Real-world assets just hit $29 billion in total on-chain value without stablecoins, and a massive $307 billion if you include them. I'm talking US treasuries, real estate, even private credit, all running on Ethereum. And honestly, this might be the biggest shift in crypto since DeFi. Welcome back to Captain Altcoin. Today I want to talk about something I believe could completely change crypto over the next decade. Real-world asset tokenization, or RWAs for short. Before we continue, quick note. This isn't financial advice. I'm just breaking down why every so-called recovery fades under scrutiny. For straight talk on the economy and markets, hit like, subscribe, and ring the bell. Now, here's the part that's really interesting to me. Tokenized RWAs just smashed through $29 billion in total on-chain value, excluding stables and Ethereum. It controls more than 75% of that market. So, this is moving faster than anyone expected. BlackRock is already diving in, and Fidelity is eyeing trillions in potential. Before we get too deep, let me explain what RWAs even are. Because I know for some of you this is still a new concept. Real-world assets are things that exist off-chain, like a house, a bond, or even art. Tokenization means putting those assets on the blockchain, usually as ERC20 tokens or something similar. Instead of owning an entire house, you can own fractions of it. Instead of dealing with all the paperwork of bonds, you can trade them instantly on-chain. But why does this matter? In my opinion, it solves one of the biggest problems in finance: liquidity. Think about $1 million property. Normally, it just sits there. With tokenization, it can be sliced into tradable shares, available 24/7 on global markets. And the yields are real. US treasuries are giving 4% APY, way better than your bank savings account. Of course, there are risks: regulation, Oracle failures, compliance. But with Ethereum's battle-tested security, this feels more legitimate than ever before. Now let's move to Ethereum's lead in this space. Ethereum is RWA central. Total on-chain value has exploded to over $29 billion excluding stablecoins, or $307 billion when you include them. It's up more than 260% just this year, and Ethereum plus its L2s hold more than 75% of the market share. Most of that comes from tokenized US bonds and private credit. Treasuries alone make up about a quarter of it. I think the reason Ethereum dominates is simple. It's reliable, secure, and every major institution already knows how to build on the EVM. Layer 2 scaling keeps the fees low, and regulators are finally giving the green light to tokenization. Ethereum's overall on-chain value is sitting at $94 billion, up almost 60% in just a few months, and RWAs are a big driver of that. If we're really heading toward 100 trillion in tokenized assets by 2030, Ethereum looks like the rails it's all going to run on. Now, let's talk about the big players. BlackRock is already here. Their Biddle fund tokenized treasuries on Ethereum and pulled in billions. They're talking about tokenized ETFs next. Apollo Global is working on private credit tokenization with yields around 8 to 10%. Fidelity is preparing tokenized products too, and their analysts think the US RWA market could reach 3.3 trillion. I honestly believe this is the strongest signal yet that institutions are moving in, and not with small bets, but with trillions. Alright, so what about projects you and I can actually watch right now? One is Mavryk Network. It's a purpose-built chain for RWAs, and they've already signed about $10 billion worth of tokenized deals, including real estate in Dubai. Their token generation event is on September 18th on Mexi, starting at 10 cents. They're focused on compliance, KYC wallets, fractional ownership, and DeFi integrations. Basically, the full package. Another one is LITAS. This protocol is focused on crowdfunding tokenized assets. It had great price action recently. Both Mavryk and LITAS are early movers in this RWA cycle, and in my opinion, they could see strong upside as more investors look for exposure. Now, let's wrap this into an investment thesis. I personally think RWAs are the bridge between TradFi and crypto. They bring real-world yields into Web3 with way less volatility than meme coins. For me, exposure to Ethereum is the safest way to play this trend. It's the rails. Then you've got the high-risk, high-reward plays like Mavryk and LITAS, which could pump big around their listings. Could this really hit 100 trillion by 2030? Some analysts say yes. Even Polygon Labs has floated numbers in the 30 trillion range by 2034. The bullish case is obvious. Institutions are piling in, yields beat inflation, and regulations are finally supportive. The bearish scenarios? Well, delays, stricter rules, or technical failures. That's why if I were allocating, I'd keep it at 10 to 20% of a portfolio. Enough to benefit, but not enough to ruin you if something breaks. And that brings me to the end. So, RWA tokenization is growing fast, and Ethereum is leading the way. If you like this video, hit that like button, subscribe to Captain Altcoin for more daily crypto insights, and drop a comment below with your favorite RWA project. I'll be reading through them all. Thanks for watching, and I'll see you in the next one.